All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast, Friday, October 27th, 2023. We'll start with a 30-minute hybrid swing portfolio, beginning with Alcoa. 30-minute charts. Here's today's price action in the yellow box. Here's the 5-day no trade today. AI, we got short. Let me get this added here. Just a moment. Yeah. So large gap up, sold off a risk box, got short as the R10 was rolling over and the Dragon was rolling over. And that was about a 2R gain on a rebound off a double bottom here. It came up, tested the Bollinger Band main, started to roll over again, took it short for about a half an hour on the final move. Amazon, big gap up and go. Bought at a risk box off the open and cash 2 at the 1-2-3 exit. Caterpillar got short twice here and here for about 2R on a typical caught a 2 short. Cliff, we tried the 1-2-3 long at the skin of the Dragon. It really didn't follow through for a fraction. CVS, big collapsing Dragon continuation for 4R and closing when the RL10 began to roll up, leaving the winter, getting ready to enter the spring, and it was near the end of the day, end of the week. Take 4R, go home, no overnight risk. Disney, we tried the SSC long, was briefly good, and then gave us about half an R. When it collapsed through the Dragon and PSAR flipped, we picked up an R and closed it before the weekend. Dish, collapsing Dragon short in the usual way, 2R. It stabilized at that lower price level all afternoon, so we took the Dragon exit as it was going into the close for 2R. Devon Energy, this one I tried like a 1-2-3 entry approaching the skin of the Dragon. It really didn't go anywhere. As it came back to the bottom of the Dragon, I got out for a scratch and then missed the afternoon move. Electronic Arts, this was a continuation of yesterday's Z3 breakout, so I treat that as a collapsing Dragon. That was 2 days ago. This is yesterday. Yesterday's we continued that position because it closed poorly, and then it sold off the whole day. So that's a 2-day move with about 1, 2, 3, 4, 5R, no overnight risk. Pretty happy with that one. Emerging markets. This was a gap up and then a fail. 1-2-3 short, standard risk, 2R going into the close. Ethereum. This was I treated this as an SSC entry, supported spring crossing. It tested the Bollinger Band mean. I could have gotten out of that a little earlier, but heading into the lunch is about a quarter of an R. I missed the rest of the sell-off. EWW, this was a re-entry on a emerging Dragon and gave us about an R, and then I missed the afternoon collapse. Brazil, trade of the day, huge gap up. 1-2-3 entry short, standard risk box, second position at 1R with momentum and collapsing in front of our eyes and broke through the PSAR. Third position when it broke through the Bollinger Band mean, no resistance or support in sight, and then closed at the end of the day for 11R. Intel, this was a huge gap up and go. I was late getting the entry in. There's the standard risk. It ran all the way up. I was able to preserve 2 in the first hour, but I gave back 3. So pretty sloppy. International paper, tried the SSC long for a fraction. It sold off. I missed the short. Another SSC for about 1 hour, and then no risk overnight. Real estate, we closed yesterday's overnight position for a half an hour. And then on the COTA 2 continuation short, collected an R, closed it before the close. Exiting before the close. Coca-Cola, collapsing dragon in the usual way for 3R and no overnight risk. Regional banks, stop me if you've heard this before. COTA 2 short, PSAR flip, price comes through the dragon, short with a standard risk box, 3R, no overnight risk. Mattel, no trade. McDonald's, we closed the short from yesterday. It then rocketed skyward, missed the long, got the COTA 2 short with a standard risk, 2R, no overnight risk. Merck, crossed the Bollinger Band main. This is a not quite a collapsing dragon because you don't get that till over here. So I'm just going to treat that as a supported fall crossing, and why not? Standard risk box, 1, 2, 3, 4R, and a dragon exit. Microsoft, we tried the gap up and go, and basically scratched. I gave back almost 2R, just sloppy. Then when it broke through the edge of the dragon and through this risk box, it speculated short for an R and no overnight risk. Marijuana, collapsing dragon continuation for 4R, no overnight risk. Nvidia, no trade. Clean energy, COTA 2 continuation short, 1R, no overnight risk. Rivian, tried the short, sloppy exit, failed for half an hour. Re-entry short at the same price level, the same standard risk, got an R, half an hour back, so I count that as a scratch for the day. SPY just started selling off, closed very poorly. A punishing way to go into the weekend. Fear is rising. Treasuries, no trade. Tesla was so wickedly volatile, I had to just stay away. I had other things going on, span of control. U.S. Steel. There's a 3-minute sniper trade of the day on this one, and I did not keep any swing trade overnight because we are in a bearish, volatile mood, and I don't want overnight risk under those conditions. So pretty good day at work by responding to the direction of price, which is in a bear volatile market and everything was collapsing. You should have smashed the short side today with that much information available. All right. Here's a sniper trade of the day. This is in Brazil, and this is 30-minute charts. So earlier in the week, that's 2 days ago, and then, or that's 3 days ago, we got that little piece for a fraction. On the 25th, it rolled over, came this way, so, and we got a piece on that one. This was yesterday's trade, and you will recall from yesterday, we took the COTA 2 entry in the usual way at the midpoint of the day. So here's the morning, here's the lunch, and then here was the recovery. COTA 2 all day, and it rose up, and we picked up 2R, and then closed it before the market close because we wanted to protect against the gap. So, I don't want to give all of that back. What we got instead was a large gap up, so we didn't get the gift. So if we keep that, obviously, we'd pick up another 2R. But one of the consequences of risk management is that you don't get everything. You can only carry as much as you can carry. So instead, what we do, because EWZ is in play and it's one of our core tradables, we were able to play the rollover and be ready for a routine short. So it gaps up here. You get a 1, 2, 3 short, and it's more than one risk box off the top. So that's just a standard RLXD and a PSAR flip kind of entry coming up. Sorry, 1, 2, 3 short with standard risk. Then it falls through the dragon and the RLXD, and the summer is turning to fall. So that's an RLXD and a PSAR flip entry. So the second position is here. It collapses through the Bollinger Band mean. That's like 2R in hand. It's a Bollinger Band mean failure. It's a 2R battle drill entry for the third position. And then at going into the close in the last hour, it stabilizes into a doji. So we just take a routine exit before the close to be flat over the weekend. And on a standard risk box, this position earns 1, 2, 3, 4, 5. This position earns 4, 1, 2, 3, 4. This position earns a little around 2 for a net of 11. So I don't want to worry about losing 2 here, as long as I can be prepared for a symbol that's in play. EWZ was in play already because of that move and the big gap up. That was a routine. That's 90 minutes into the day. You got 90 minutes to frame that trade for a routine short with a standard risk box. This one is another sniper trade of the day. This is a 3-minute chart. This is U.S. Steel. Here's yesterday's close. Here's the great big gap up. So what does that trigger for us? An alert. So we come and look at that, and then we see the OR3 is established. It goes all the way up, and then comes all the way back here to close. And then in the next bar, it falls through the low here. So we're going to get a standard entry on the short side, and we're playing for a return to the open. We get a standard, we put a standard risk on it. It immediately fails for -1. I stop and reverse with the standard risk on it. It immediately fails, so we're at -2R. Notice the RL10 rolls over. It falls through the dragon and through the Bollinger Band mean and breaks the PSAR, so I'm short with a standard risk. Collect 1R back. It crosses the Bollinger Band mean. The dragon is starting to roll up. I take the RLXD entry, standard risk. I add a second position at the 2R battle drill. Take a standard exit on both of those positions. So there's entry 1, there's entry 2. Here's your standard risk. The PSAR works the whole way up. This position on that much risk earns 1, 2, 3, 4, 5, 6, 7, 8. This one earns 1, 2, 3, 4, 5. Plus 1, so you're plus 14 in here, and you're -2, you are net 12. Here's Mark on EWZ. This is his play on EWZ. This is him working on 3-minute charts. You saw me on the 30-minute. He gets the gap up, sells off a risk box, so he gets short and covers. That's his logic for trade framing. This is a continuation or a re-entry on a collapsing dragon, which scratches. He tries the long, which scratches. He sees the collapsing dragon here. Hulk smash. Hey, let's put a 2R battle drill in here a couple times, and this would have been 20R. So let's try to get better, Mark. In his British pound US dollar on 3-minute charts, he does some grinding. Nets 2R. So about 14R for the day on him. Perfect collapsing dragon as it comes through the VWAP. Cash. Re-entry, scratch. Re-entry, short, loss. Probably should have been here. So that one got a little late, and then I think he was resetting his brain. So instead of being here like he routinely should be, he gives back an extra R or loses an opportunity R. Tries the second one, quick scratch. Go ahead, short that. Or at least short it when it crosses the VWAP. You gave it back, and then you let it come all the way back to this. That's not bad. Then he tries long, cuts it short. Let's stop and reverse, either one of those two. So this could have been 5 to 6R, but we'll take this as a great learning opportunity. There's one we could have had. Getting paid to learn. If you already know what I'm going to say in advance, don't be sorry. Let's just get better. Just note it, and we'll why were we sloppy? Why were we late? And then we'll work on improving the. Was it a mental state? Was it span of control? Whatever it was. Sloppy means deliberately hurried or unprepared. So let's tighten up the source of the problem. But that's a pretty good day at work. Really well done. George. So here's the open. Now we get this, and then in the middle of this, it just starts to slip down, so he gets short and then takes an immediate exit 2 minutes later inside the noise. That's a full R10. So this is really in the noise. The R10 never violated that. And then we don't take the PSAR flip. We don't take the PSAR flip. We don't take the PSAR flip. That is a minus 0.5. This is what that might look like. See which one was that? IYR. Yeah, IYR. So this is on 1 minute chart. So with standard work, we notice the gap up opening. Even if we just take the opening range, we get short here on the collapsing dragon. And then without the 2R battle drill, now I can, maybe I get short where you got short, and then I still exit there, and then that is, the opportunity cost of that was 1, 2, probably 3.8. And here's some things that you can notice while you're preparing what to do here. You had it come out of you have it winter, spring that rejects right here. It enters the Red River, leaves the Red River, raging harsh winter. That's what a raging harsh winters look like. You have it on the screen and you have it color coded and you can see that the break is there. Let's get that trade. If you're trading on the 1 minute, it's telling me that you want to be a day trader. So if we're going to be a day trader, we got to be prepared for this and not be surprised by that. Then we could have taken that one and probably pick up an R. And then notice where it fails as this is coming into the station and it rolls into the fall and it's coming into the Red River. And then this is where it breaks. It breaks the collapsing dragon. It breaks through the Bollinger Band mean. It's now entering the winter. So we could either get an entry here or an entry there with the same standard risk box. And you get paid. So opportunities were on the table. So study that one. This is an Alcoa. Same thing. Short right here. That's your standard risk box. Your R10 standard risk box happened to be that big. Stop me if you've heard this before. And then here's your exit. The R10 did not get through the PSAR, but if you exit here, then you re-enter here and you still get that leg. We could have, you got short here and then exited here. I like that as a collapsing dragon with a Kata 2 because you have this and you have that. And after that kind of move and it just does this little bump, rejects the far side of the river. I love that short. We might have stayed long a little, or stayed in there a little too long, but that's fine. You could get long here. You don't lose money on that trade. But in a bearish, volatile market with a huge gap up that starts failing, son, let's see. John submitted answers to all the quizzes that were posted on Patreon last night. I'm going to go through that in the Foundations course Q&A so I can give him a little more deliberate feedback. But this is how you do the work. That's how you do the work. All right. I'm going to cover the first couple pieces of the report. I still have to print the daily portion of it. It got disrupted in the blue screen of death. So give me half a second to open up the first couple pages. All right. So this is the weekend report for the 28th. Almost everything you need to know is on this first page and right at the top. Bearish volatile, getting smashed on all the look back periods except the very, very longest, which is getting ready to go south. Below the 200-day moving average by 3%. The ADX at 30 is a very strong downward trend. We are in volatile conditions with risk off and getting worse. It's just getting ready to go below 1, so this is becoming abnormal to the downside. ETF2 has been at 0%. recommended long-term asset allocation for 6 weeks. All of the holdings recommended by BMR are in cash because they are below their 4-month moving average. So even the BMR is completely in cash. We'll take a look at some of our weekend charts now. There's leg 1, leg 2, leg 3. The RL90 has rolled over, as we've noted. The 270 just rolled over and is now coming through its little buffer. That little gray zone in here is the buffer. That's a 30-period Bollinger Band on this. So when you see it comes out of its own little Bollinger Band, that means you're starting to see trending behavior on the 270. And that means that long-term trend has been in play since January. Really, maybe even February. And it just closed. That tells you the end of joy is here. The warning on that was this one, a lower high, and then this one, which broke, and this broke. So there was warnings at 440, and we are at 410. So that's a 10% protective warning that if you pay attention, you save 10% losses, which is not even to say, hey, I bet you could get short in here and collect some money in shorter term trading. But even if all you do is protect, you just saved 10% by paying attention to the long-term trends once a week in a matter of about a minute. The 3-9 sniper breaks that down a little more carefully, and you can now see things like the PSAR. Like here's the PSAR flip off the peak, and there's your Kata 2. It broke the Bollinger Band mean. That's a collapsing dragon short. And if you're just using my brother's 3-day sniper, the fast sniper, you've been short since 440. And you've got a 9% gain on a single position. If you're using the slow sniper, the 9D sniper, there's your P1, there's your RLXD. Again, you could be short at 440 and be enjoying that move. Now, in both cases, you can see the price level is looking down here to be 390. 390 is the next support level. So you can observe a lot just by watching. 150-day look back. The S&P is in Godzilla territory now. He's in the bottom 10% of his 150-day look back. He's in the bottom 10% of his 30-day look back and the 10-day look back. And the 5-day volatility is enormous. Godzilla, king of the monsters. That means this is a compound critical state ready to go hard in either direction. Godzilla territory. Sniper Trading Workshop. The 30-day look back, you can see it a little more clearly. That's as orderly a short side swing as you could want. The 30-minute, you see how poorly that closed. And now this little price level here at 407 is the lower end of support of that very thick support band that we saw that was inherited from about 3 weeks ago. Sorry. Or no, 3 months ago. Sorry. Yeah. It's been telling us. Even this discipline has been telling us what's going on. The only thing that are above their 4-month moving average, oil exploration, and even that got smashed today. Blended commodities, gold, agriculture. China, 1 week. Beware. And we saw Brazil already get smashed on this, and it's already rolled over. Utilities and treasuries. You can clearly see sector cycling and the difference between short-term or long-term winners and losers, and then short-term winners and losers. And the green and red tells you who the exceptional performers are on both ends of the histogram. Inside the Dow, the only ones that are above their 4-month, Amgen, but that got smashed this week. IBM is the oddball here. Verizon, strange. But even Verizon's kind of a flash in the pan. Intel and IBM are the anomalies right now. So I have to watch them carefully. I pay attention to the anomalies. So that's how you read that chart. Inside the U.S., the mid caps and the small caps are both underperforming. The large caps, and that's the Dow, the S&P, and the NASDAQ, are above average. Commodities, oil and gold are great. Most of Asia is below average. All of Europe is below average. Treasuries are still recovering from their historic sell-off, and even U.S. real estate is lagging. But I think that's a swing trade in the making, as people are going to wake up and discover you got to put your money somewhere. In real estate investment trusts, I'm thinking of creating a REIT sniper report so that we can get a combination of the nice dividend payouts plus tactical trading. I had my son put together a list of 25 REITs, and we're going to run some sniper stats on that. I want to get him into the analyst business here. So if you'd be interested in that report from him, send me a note, and we'll work up some kind of subscription agreement for a focused technical report there. Energy, commodities, defensive plays, standard work. Semiconductors, consumer discretionary, Brazil, I mean, just EWZ, that should be one of the first three symbols on your stack every single day. It's why we use it in the Kata 2 Challenge course, and there's a new cohort starting on November 7th. There's a couple slots left. This is the cheapest price you're ever going to get it, because that's where I'm sending people that are buying the book, which should be, they're uploading it to Kindle tonight, and I'm expecting a lot more interest from folks out there in trading land. And where I'm going to send them is to the Kata 2 course with Phil and Griff. And they can only teach as many as they can teach. So if you were ever going to get the best price and get it while you can, now's the time to do it. Word to the wise. All right, that's everything I got for today. I'm going to finish printing the report and send that out. If you give me about 5 minutes, I will go over that weekly quiz with John, because I have a little bit extra time tonight, but I got to open that up and go find it. So if you want to take a 5-minute break, I will start that the quiz review of John's work as an example of how to do it right. I like the work he put in there, so I want to add that to this to tonight's recording. So, if you go ahead and take a 5 minute break, we'll start up again in 5 minutes. Okay, so we're back. This is the quiz from this week on ETHE. So, location number one, 10 period, percent R's above minus 20. He's noticing that. Yep. And spring turned to summer, but summer is rolling over in this direction, in this location, after just a recent PSAR flip. So be ready to exit longs and initiate shorts. I agree. Two, price crosses the PSAR and river. Exit longs, supported fall crossing. Yes, your risk box would either be top of the dragon or at the PSAR flip dot, which is the top of the RL10. Number three, 2R battle drill. Yes, and also the R10 makes a local bottom and then starts to test higher, but then it fails, so that's like an R10 wiggle as well. He says, I know Tharp's people say that adding to winners is one of the rare habits which show up in profitable traders. Yeah, the 2R battle drill is kind of the way to do that. 4, another potential add, absolutely, because you see the R10 just got steeper in there. So when that next elephant bar down collapses below the low of that, that's an indicator. Notice how you had a doji, a larger doji, and then a failure through that doji. That means you could be adding in here, then you get rewarded immediately with the next two bars. And then at 5, this is a morning hook, except it's at 1 p.m. That's like a elephant bar and a bottoming tail. Like this is 3-minute bars. So if you merge that and made it a 5-minute bar, you'd see an open, huge sell-off, huge recovery near the top. And that would be a bottoming tail, meaning it's time to get out. 6, R10, well, R10 crosses the RL30 at 7. So you're one number off on here. So 6, the R10 bottoms out. 7 is the P1. R10 crosses the RL30. Still in the winter. At 8, in this region, what you're getting is the R10 enters the dragon, crosses the spine, PSAR flip. 9 is the official PSAR flip, where it posts to. Yeah, these numbers are off by 1. So here, the R10 this is the RL10, crosses the Bollinger Band mean at 10. Yeah. 9, RL10 crossing the 30-bar moving average. No, you get that up here at 10. Is the RL30 crossing? No, this is the RL10. So that's the RL10 crossing the Bollinger Band mean. At 11 is where the RL30 crosses the Bollinger Band mean. 9 is the PSAR flip and the RLXD at 8. This is like a COTA 2 entry at 10 as well. 11, the RL30 crosses the dragon. Now it's officially, long side bias. And you can see how that gets rewarded. And around 11 and 12, spring turns to summer. You get an expanding range 1, 2, 3. This is an abnormally large move, which then sells back to the R10, but then doesn't collapse further, so the skin of the dragon is working. 15, 16, 17, and 18 are all different places where you might pick a rising line as your trailing stop. 15 would be, I want to extend the PSAR. 16, I'm going to extend the lower skin of the dragon. 17 is I'm going to extend the spine of the dragon. 18 is if I extended the upper skin of the dragon. 18 is also a stop below the low of that little elephant bar right there. So if you were just going to ratchet your stop up instead of putting a trailing stop, if you were moving these manually up step by step, then 19 would, when you're in 14 and making a decision on where to place your stop in this cluster, you might say trailing it with a PSAR, that would give you the line at 15. Trailing with the southern skin, spine, or upper skin of the dragon gives you 16, 17, 18. 19 says, I'm going to post it right at the PSAR and leave it. 20 says, I'm going to post it at the southern skin of the dragon and leave it. 18 at the lowest low of this surge. 20 was this one here. So 21. At 20, I suppose if you came down here and looked, you'd see it was entering, getting ready to enter overbought again. 21 is a peak. We're looking at the oscillators. 21 is overbought rolling over. 22 is entering oversold. And now for the entire duration of 23 to 24, it is oversold. And we could be stalking WMB3 entries, which we don't get here because even though you have oversold and an uptick, you never get a candle breakout here. So you can't ever get a WMB3 to go long while this thing is collapsing, which means that you should be taking the shorts when it collapses below the previous bar's low. So if it ain't working up, then it may be working down. And then you get paid off in this little region. At 24, we're still overbought. At 25, we have the first uptick, which means that is a setup bar. And so I can set 5 cents above this bar here. I didn't get a breakout, so the roll it's still an uptick. So that means this bar at 26 is the setup bar for WMB3. So we put the entry 5 cents above. Then this is the entry at 26. And then 27, we just noticed that after this nice grinding upward move, the MACD histogram does not break below into the red. It resumes and starts grinding up. So you got to actually another leg up. And that's what 27 is showing, is that the upward tick of the MACD was starting to grind. Okay, so that's everything we got for this quiz. Pretty good job. I think you had the right lineup and commentary, but I think there was somewhere in there one of your numbers got shorted, and so it was offset by one. But if you compare what I just said to what you could update your cheat sheet, and then I would keep that as a lesson in your trader's workbook. Okay, so that's how you do the quizzes. If you go into Campfire and search for quiz, you'll find over 200 quizzes just like that if you want to practice that stuff. So I'm building a workshop that will include some answer sheets like this for all of those quizzes. If you would like to be an intern and work on that, and you're in the sound of my voice, to assemble these kinds of answer sheets, send me an email, and we can probably work something out. And you can take that course for free in exchange for doing some of the Lord's work here. All right, that's everything we got, guys. We'll get this published and posted. Now print the reports within the hour. Take good care, and we'll see the True Storytellers in the morning tomorrow. And there's no evening podcasts on Saturday nights. And then we'll have the 9 o'clock Sunday morning Foundations check-in, the Q&A, and then also at 10 o'clock the Creativity 202 office hours check-in for the guys taking those courses. So take good care, and we shall see you soon.